Hi, I'm Chris Beauchamp, Chief Market Analyst at IG. We're going to watch a speech by Donald Trump. We're going to talk about what it means, and we're going to try and think about what it means for you as an investor and how you can process what he says in the speech to help build a framework for investing.
As part of this historic commitment, Apple will massively increase spending on its domestic supply chain for the iPhone and will build the largest and most sophisticated smart glass production line in the world in Harrodsburg, Kentucky, which is a great, actually, I did very well there. I like it because I did very well there. I did very well in Kentucky.
Always about poll ratings. Always about the poll.
I thought maybe while we're up, I'll interrupt my own speech by you might show them a little bit about the product that you're going to be doing in Kentucky, Tim.
Absolutely. Do you mind if I step up?
Yes, please.
Oh, is this where he gives him the present? He bribes the president with something.
Comes on the morning line.
Yes, he literally bribes the president of the United States live on air with some kind of gift.
Comes from Utah and is 24.
Of course it's solid gold, because what more would you want in the White House? An Oval Office is already full to the brim of gold. Don't break it, Tim. Don't break it.
Congratulations, Mr. President.
Trump is talking here about bringing manufacturing, specifically Apple manufacturing, back to the US. It's part of his long-running idea that manufacturing in the US has been hollowed out by the last 40 years of free trade policies, which in itself is true. But the question is really what this means for Apple and other tech companies, and indeed plenty of the other US companies that have built their margins, their earnings on manufacturing things overseas where it's cheaper. If you bring it back to the US, assuming these factories ever get built, it means it costs more. It'll cost more in terms of wages. It'll cost more in terms of product. And that means the cost of these goods goes up, and that hits their margins because clearly the consumer can't bear the increase entirely. But the theme has been the last year of bringing manufacturing back to the US. It's laudable in itself. Western countries have seen their manufacturing base hollowed out, but it's hard to really work out the implications for a sector that have built their business operations on low margin operations overseas that they can then use to increase profit margins to deliver returns for shareholders. So the risk is that share prices don't show the strong returns they have over the last 20 years because companies aren't making as much money.